I'm told very confidently by those who should know that we've sorted out what was happening with the microphones and that the feedback buzz or whatever else was happening and was particularly interfering apparently with the feed has been resolved. If it plays up again, we'll have people look at it again at lunchtime and see if we can solve it. I understand how important the feed is, but we're trying. Ms Orr.
Thank you, Commissioner. I call Dennis McMahon, Chris Wheatcroft and Warren Day to give concurrent evidence.
Oh, can we deal one at a time? Mr Wheatcroft first. Would you prefer to be sworn or make an affirmation?
Sworn's fine.
Thank you.
Just repeat after me. I swear by Almighty God.
I swear by Almighty God.
That the evidence I shall give.
That the evidence I shall give.
Will be the truth.
Will be the truth.
The whole truth.
The whole truth.
And nothing but the truth.
And nothing but the truth.
Thank you very much. Now, Mr McMahon, sworn or affirmation?
Sworn, thanks.
Yes.
I swear by Almighty God.
I swear by Almighty God.
That the evidence I shall give.
That the evidence I shall give.
Will be the truth.
Will be the truth.
The whole truth.
The whole truth.
And nothing but the truth.
And nothing but the truth.
Thank you very much, Mr McMahon. And finally, Mr Day, would you prefer an oath or affirmation?
An oath, Commissioner.
Yes.
I swear by Almighty God.
I swear by Almighty God.
That the evidence I shall give.
That the evidence I shall give.
Will be the truth.
Will be the truth.
The whole truth.
The whole truth.
And nothing but the truth.
And nothing but the truth.
Thank you very much, Mr Day. Do sit down. Yes, Ms Orr.
Mr McMahon, could I start with you? Your full name is Dennis McMahon.
That's correct.
You are a senior lawyer with Legal Aid Queensland.
That's correct.
And Legal Aid's head office is at 44 Herschel Street in Brisbane.
Correct.
And have you received a summons to attend and give evidence today, Mr McMahon?
I have.
Do you have that summons there?
Do have.
I tendered that summons, Commissioner.
Exhibit 4.1, the summons to Mr McMahon.
Mr McMahon, you've made a statement to the Royal Commission dated the 19th of the 19th of June 2018.
That's correct.
And you have that statement there.
That's correct.
Are the contents of that statement true and correct?
Yes.
I tender that statement.
The statement of Mr McMahon of 19 June 2018, Exhibit 4.2.
Before I move to the other witnesses, can I ask you a few preliminary questions, Mr McMahon? How long have you been a solicitor?
I was admitted in 1979.
And you work in the Farm and Rural Legal Services Unit at Legal Aid Queensland?
That's correct.
And how long have you worked in that unit?
Since 2003.
And could you describe for the Commission the work of the Farm and Rural Legal Services Unit?
The unit only deals with negotiations for farmers and rural-based businesses with their credit providers. It tends to negotiations and mediations.
And what's your role within that unit, Mr McMahon?
I'm a senior lawyer.
Thank you. How many lawyers are in that unit?
2.
Thank you. And how do farming clients find their way to the Farm and Rural Legal Services Unit in Queensland Legal Aid?
Until the recent Act was introduced, the Queensland Farm Finance Strategy had obligations in the document obligating banks to encourage their customers, if they consider them to be in financial difficulties, to seek professional help. That included seeking help from their accountants, rural financial counsellors, solicitors. Legal Aid was part of the referral process there, but we would primarily get our referrals from rural financial counsellors, sometimes from private profession and even sometimes from banks.
And under the new scheme, under the compulsory scheme,
under
are
the new
banks
scheme,
also obligated?
There's no obligation. There's nothing mentioned in the Act about how it's referred, and our referrals would primarily be coming from the rural financial counselling services.
Thank you. And are there conditions that a potential client has to meet before Legal Aid can act for them?
Under the Farm and Rural Legal Service, if the client has been engaged with difficulties with their banks, they would normally qualify. There's no asset or income test attaching to the process.
Thank you. Now, I'll ask the other panellists some questions and come back to you, Mr McMahon. Mr Wheatcroft, your name is Chris Wheatcroft?
Yes.
And you are the Chief Executive Officer of Primary Production Services Incorporated.
That's correct.
And your address is 111 Augustus Street in Geraldton in Western Australia. Now, Mr Wheatcroft, have you received a summons to attend and give evidence? Do you have that summons there?
I have.
Tender that summons, Commissioner.
Exhibit 4.3, the summons to Mr Wheatcroft.
And Mr Wheatcroft, you've made a statement to the Royal Commission dated the 15th of June 2018.
I have.
Are the contents of that statement true and correct?
They are.
Thank you. I tender that statement.
Exhibit 4.4, the statement of Mr Wheatcroft of 15 June 18.
Mr Wheatcroft, Primary Production Services Incorporated, the entity of which you are CEO, is the entity that runs the Western Australian Rural Financial Counselling Service.
That's correct.
And how long has Primary Production Services run the Western Australian Rural Financial Counselling Service?
It has existed for 3 years, but the board that runs it has run it for 11 years.
Thank you. And could you please explain what a rural financial counsellor does?
The intention is to return people to profitability or to assist them in adjusting within or out of agriculture. We use a Harvard Business Planning framework to facilitate people's understanding of their business position, and against that we use counselling skills to facilitate the understanding of people as to the meaning of the implications of and the dissonances that exist within what they've mapped out for themselves.
And are there any particular qualifications that are necessary to be a rural financial counsellor?
There is a diploma of financial counselling that they need to have, and in addition we require that they have a good understanding of the finance industry and banking for farmers. They have to also have a good understanding of agriculture and the various forms we deal with it. It's not just broadacre. And they need to have a propensity to be able to listen and carry out the counselling skills that are required. But they don't have true counselling qualifications in terms of a degree.
And there are rural financial counselling services throughout Australia.
There are.
And could you explain how they are organised?
There are 3 state services: South Australia, Queensland, South Australia, Western Australia and Victoria, and Tasmania. Victoria have 4, New South Wales have 3 from memory, Queensland has 2.
And how are the rural financial counselling services funded?
90% roughly, approximately, comes from the federal government and the remainder from the state government.
And how many rural financial counsellors do you have in Western Australia?
We have 10 at this time.
And what sort of backgrounds do they have?
From CPA qualifications, banking, farming,
And
teaching, education.
And you worked as a rural financial counsellor yourself?
I did
before?
for 7 years.
Thank
Yes.
you. And now that you're CEO, do you maintain any involvement with the clients?
I supervise all difficult cases and have oversight of the program.
And how do clients find their way to a rural financial counsellor in Western Australia?
So half would be self-referred, and it's usually the farming partner, the wife, that refers them. Outside that, it's the stakeholders, from banks to accountants to the people that are involved and know that there's a problem for the farmer.
Thank you, Mr Wheatcroft. Now, could I turn to you, Mr Day? Your name is Warren Day.
Yes.
And you are the Australian Securities and Investments Commission's Regional Commissioner for Victoria.
Yes.
And your business address is 120 Collins Street, Melbourne.
Yes.
Mr Day, have you received a summons to attend and give evidence?
Yes, I have.
You have that summons there?
I do.
I tender that summons.
Exhibit 4.5, the summons to Mr Day.
And Mr Day, you've made a statement to the Royal Commission dated the 8th of June 2018.
Yes, I have.
Are the contents of that statement true and correct?
Yes.
I tender that statement, Commissioner.
Exhibit 4.6, statement of Mr Day, 8 June 18.
Mr Day, you're a member of the Commission's Senior Executive Leadership Team with responsibility for ASIC's Assessment and Intelligence Group.
That's correct.
And the Assessment and Intelligence Group has responsibility for misconduct and breach reporting.
Amongst other things, yes.
And how does ASIC and how do you, in your official capacity, come into contact with farmers?
It's generally through 2 ways. So through the Misconduct and Breach Reporting Team, which is ASIC's, in effect, National Complaints Program. Obviously, there's a large number of matters that are raised on various issues, including farm finance and farming issues, through that channel, if you like. That may also, though, include contacts direct to the Commission or referrals we get from parliamentarians on behalf of their constituents. And so they all come in through that group and we look at it that way. Certainly in relation to some of the matters raised by parliamentarians or directly with the Commission, I might become personally involved and speak to farmers in relation to the matters they've raised. The second way is through my regional commissioner work. We attend a number of events and a number of outreach activities across the state of Victoria. And so through that, it may be that I'll speak to a number of farmers at field days or other farming expos and like events. And through that contact, again, use that as a channel within which to understand the issues that are going on.
And you've identified 68 complaints to ASIC in the period from the 1st of January 2008 to 19 May 2008 that were about 2018, that were about rural matters, farm lending or enforcement?
My team has, yes.
Yes. And much of your statement's informed by analysis that your team has done of those complaints?
That's correct.
Thank you. All right. Now, can I come back to you firstly, Mr. Wheatcroft? Could you explain to the Commission how important is debt finance to farmers?
I would estimate that probably 80% of agriculture relies on debt financing. Yep.
And Mr. McMahon, do you have any comment on that?
I think debt financing is absolutely vital for agriculture, for the development and the continuation of it.
And Mr. McMahon, what are the types of facilities that are most commonly used by farmers?
The normal trading account would be the overdraft. That is, the majority of farmers would have those. There's also many other various forms of loans that are available, and each bank has a different name for them and whatever, but they can have a loan structure where there's term loans tied up with interest-only loans, short-term loans, even though they're in a facility that's for 20 years, yet parts of it can be drawn in early. So there is a mixture of those sorts of things, as well as they do even go down to credit card facilities. There's stock mortgages, there's facilities for crop funding, etc.
And what security is usually taken by banks who lend to farmers?
The banks would normally take registered mortgage over the farm itself, over the land. That normally would have, most instances that would involve the farmhouse, or it can be intergenerational. It could be 3 and 4 families on the one property. In addition to the landed security, they'll take security over the livestock, plant and equipment, some of the crops. They'll take personal guarantees. They'll also take off-farm assets as security. They'll can take mortgages off either the assets, for example, the partnership can be secured by way of an agreement with the bank.
Mr. Wheatcroft, do you have any further comment on the securities taken by banks in farming finance?
I just mentioned to the Commission that regardless of whether or not the mortgage is over the home, you cannot go broke in Australia without the bank having access to it. The only benefit of not having a mortgage over a property as you go broke is you can dispose of it under your own terms. It's debatable whether you can even use the proceeds for your own purpose, but really there is little benefit in practice.
Mr. Day, does ASIC have a role in the regulation of farming finance?
I've had the benefit of hearing your opening this morning, Ms. Orr, and effectively farm finance is in some respects a subset of small business lending, and the Corporations Act effectively has very little coverage, if any, of in relation to small business lending and farm finance, therefore. The only real provisions are in relation to unfair contract terms, which are quite recent. The provisions in relation to misleading and deceptive conduct, warranties and unconscionable conduct in the ASIC Act, not in the Corporations Act. So limitations in those types of spaces is really what we're dealing with. Therefore, there's no need for a licence in Australia for small business lending, albeit that the major lenders who take up the huge majority of loans in Australia all have licences for other respects, and therefore there are certain standards they have to meet in terms of external dispute resolution and those types of things.
And in your view, should ASIC have a greater role in the regulation of farming finance?
There's certainly an argument for that. As I said, if you're a non-bank lender for farm finance, it may be that if you have no other licence, you're not required to be a member of external dispute resolution schemes such as CIO or FOS, and soon to be AFCA, and therefore you might not be able, a borrower wouldn't be able to avail themselves of those services, whereas they can at the moment. So, a standard in relation to that. The other questions really are then about the sort of practices and standards of conduct required of banks in relation to their lending activities, and some of that is covered effectively through the Code of Conduct, Banking Code of Conduct. Some of that is also covered in relation to their requirement, because of the other licence they have, of membership of the External Dispute Resolution Scheme. So I guess the point I'm making is a lot of the features, if you like, of a licensing regime, borrowers for small business or farming finance enjoy those things, but the minimum standards, responsible lending, those things aren't there at the moment. So there is an argument maybe that's required.
Mr. Wheatcroft, how do farmers in Western Australia most commonly interact with banks?
Often in person. I think this is about whether people come to the farms. Usually there is a manager who will visit them. Some farmers choose to deal in Perth because they prefer to keep it away from their local area. And once you enter a difficulty, you'll deal with the asset management wherever the bank happens to have those people located. And it is not consistent. Like, it may be with the same bank. One person will be dealing interstate and another within the state. Is that an answer?
Yes, thank you. And Mr. McMahon, in Queensland, how do farmers interact with banks?
Mainly in person. The Farm and Rural Legal Service mainly deals with asset management, so dealing with the bank offices normally in the capitals. However, the clients prior to getting into asset management would normally be dealing with their local agribusiness banker, and they're strategically placed throughout the state.
And Mr. Wheatcroft, have there been many, to your observation, bank closures in rural areas of Western Australia in recent years?
I think it's correct that most country towns, many country towns are reducing, and the banks are one of the institutions that disappear, yes.
And in Queensland, Mr. McMahon?
Yeah, there's similar experiences as well. Recently, it was in the Queensland Country Life published there that I think Ingham had its ANZ and Suncorp branches were just recently closed, and the ANZ branch in Claremont was closed. It was just a publication in the last 2 weeks. And I think the same thing exists. Problem with customers in those circumstances are they've got a long way to travel to their next branch.
I would make the point that when people, especially if they enter difficulty, the best thing for them to have is a competent manager with decision-making ability and understanding of their business and the issues that are affecting them. And I do not think that the localness of that matters. It actually is the bank having someone that can make decisions competently at that point and in a timely fashion, because timeliness costs money if it's delayed.
No matter where they are.
I don't think it matters where they are. They will usually travel for one meeting about it, but no.
And do I take it, Mr. Wheatcroft, you're referring to the asset management phase of the engagement of a farmer with the bank rather than a loan origination phase, for example?
So with free enterprise, the banks are very keen on maximising the benefit. So I think they decide whether the person needs to be local or not, and that's done in their interest. Asset management is correct. I'm referring to the competent person is what's needed at that time.
So that's at the point when the farmer's already in trouble, in default on their facilities.
It's actually difficulties in farming take a long time, years, compared to other businesses. So it's at the point where decisions need to be made. If finance starts to be restricted because decisions that take too long to be made, the opportunities to lower your costs, to be timely in putting in the crop, are lost. And those things cost businesses significantly. And most of the angst I experience with people that feel they've suffered badly is because of the timeliness, because they lost the timeliness of the decision making.
It lost the time between what are the outer limits of the time that's lost? What's the point that starts the time running and then you get a decision? I understand that, but what's the time you're referring to? When they have gone to the bank, when the bank should be moving? Go on.
Commissioner, at the end of a season for Broadacre, the farmer is then looking funding for the following year.
Yep.
It's timely to have the decisions then as to how much money they have, because the opportunity to purchase fertiliser, to backload it at a lower cost, are significant savings to a business. In my experience, as the bank reduces, as they enter difficulty, the bank extends that time out almost to the start of seeding. And we will find people you should be dry seeding, say in April in the northern region, and people can still be debating with the bank in April, May, as to what money they have. There is also a timeliness that, in addition to that, CSIRO have developed a very good cropping model that takes the soil characteristics and water rainfall and 100 years of history, and it gives the probability of yield based against additional fertiliser, given the rain. Forecast of rain is 5 days out. You can look at yield profit, which is the model they use, and you can say if I put yield on, if I put additional fertiliser on, it will 80% chance of increasing the yield and subsequent profit. It's a 5-day window. So in answer that both windows are important.
Mr Wheatcroft, have you noticed any changes in the agricultural lenders that are operating within Western Australia over the last 10 years?
There has been some entry-exit.
Yes. Who has entered and exited?
In my statement, I've noted that Suncorp have come in and reduced. Landmark, Elders Finance, largely. There was a West Coast Livestock that started, and AACL has come and gone, which was almost a share. Oh, sorry. It had investors sharing in the production risk and the profit.
And did you observe consequences for farmers in Western Australia of the entry and exit of those entities from the lending market?
I did.
What were they?
So with Landmark, it was particularly noticeable because much of West Australia was heading into a drought. The book changed and we couldn't find people to make decisions, and it was almost impossible for those farmers to have responses to their requests. And so that was a significant difficulty for them. Some courts, similarly, as they've withdrawn, they've tended to move management to Queensland, but the difficulty there is that people aren't experienced in Western Australia. So that dissonance between what I said earlier, it doesn't matter. I don't think it would have mattered if they had people that really understood what was happening, but that's lost.
Mr McMahon, what about Queensland? Are there particular players in the market who have entered and exited in recent years?
In recent years, with the Commonwealth Bank acquisition of Bankwest book, they basically stopped lending in Queensland, and the Bankwest customers were either migrated over or they had to find finance elsewhere. Then, of course, there was the Landmark AWB acquisition by ANZ, and there has been various name changes and the like with Rural Bank and Elders. There was Elders Rural Finance for a while there, and I think it's now called Rural Bank or Rural Financial Services or something like that.
And what did you observe as the consequences of the Bankwest and Landmark events that you referred to then?
Well, I think it was similar to what Mr Wheatcroft has mentioned, that the customers, there was a complaint about not knowing who to talk to, about people, there was an enormous change in staff. People would have a manager for a short time and then that manager would be gone. The clients really needed to have someone that understood their business, and as in Western Australia you have to have the funding absolutely necessary at the time And if that wasn't available, the consequences for a business is it's not just that particular year. With farming, it can go on for several years after that. If you don't, for example, with sugar, if you don't give it the correct fertiliser and sprays at the correct time, that's potentially going to affect the crop production for the next couple of years. And that in turn affects not only the customer but also the bank's position as well, because the value of the property goes down. It's very easy to see the effects of a failure to manage those crops, and all of the prospective buyers, if that's what ultimately happens, would see that property hasn't been managed to the correct way or to the usual format. So certainly timeliness is a massive issue.
And Mr Day, are you aware of the relative market share of the major banks in the agricultural lending market?
So the major banks have increased over time their share of rural finance lending to the point now that it's in the high 80s into early 90s% of the market. And you've seen over time a number of other non-bank lenders disappear from the market as well. So in the Victorian circumstance, you've seen in the past debenture offerers, such as Southern Securities or Banksia be in the market. They're obviously, for a whole range of reasons, post-GFC, not there anymore, or their activities have been taken over by others. I think Southern Securities was taken over by Bendigo Bank, their activities there. But those other lenders have just disappeared.
And Mr Wheatcroft, who are the major agricultural lenders in Western Australia now?
I'd say the four large banks, Rabo, to a lesser extent Rural Bank, I think.
And in Queensland, Mr McMahon?
All of those institutions plus Suncorp, and there are some credit unions do provide some facilities, and of course we've got the pastoral houses that provide ongoing finance for either stock or crop, and there's merchant houses that may provide assistance to horticulturalists and those type of people.
Mr McMahon, in your view, what are the most common causes for farmers facing financial difficulty?
That's a difficult question because each matter is really has its own sets of circumstances. I suppose when I'm looking at a file, I look at the original loan to see whether there was some alarm bells there, and they often arise if you can see that if the loan was too tight at the beginning, that within a short period of time there was cash flow difficulties, clients are going back to the bank asking for more finance, and that will perhaps be an indicator that there was insufficient funds given in the first place. They weren't provided, there was insufficient consideration given of cash flows. And so there is that initial problem. Throughout the conduct of the matter, if you see that over a period of time the loan is continuing to rise, that may indicate either a failing business or that there's been through successive periods of drought and the like. And then you look at what was the cause of default, and often it'll be the overdrafts being overdrawn to meet the interest payments on the other facilities, and that can be because of either failure for crop, failure for drought, or just bad timing. The crop may not be ready to come off. So there's the fact that the facilities will fall out of order may not necessarily be an indication of the business itself, but it certainly is grounds for the bank to raise some concerns about the conduct of the account.
Do you think that banks do enough to take into account the seasonal nature of agriculture and the effects of weather events like droughts and floods?
I find that that's another difficult question to answer, but if the client is aware that issues are going to be arising, and normally they can be, if they, for example, they're aware that this season has had a poor return, they can go and discuss with their bank or they should be able to go and discuss with their bank, these are the concerns they have and what are we going to do for the future. So if the concern relates to seasonal conditions, then there should be an ability within the business to work through the program. This is where you've got to have Royal Financial Counsellors looking at it, doing projections, and if the clients are given early access to encouragement to go and seek these services, a lot of the problems that arise may not become the acute matters that they eventually do become without the proper assistance.
Mr Day, do you have observations about what ASIC sees as the most common causes of financial difficulty for farmers?
I think, as Mr McMahon said, it's sometimes difficult to categorise them, but I think the types of issues we see is a key person issue. So one of the family might become gravely ill, and that distracts from the endeavour, and so that will cause impacts. A lack of experience. Often you see people going into farming who just don't have the level of requisite experience or family history in farming, and that causes issues. Obviously, climate, weather, drought, natural weather events, those types of impacts. Changes in markets in terms of price because of world prices or because of other changes such as export of cattle problems that have caused. Commonly we have seen loan to value ratio issues been raised in the past. Terms coming up, like the end of a term of a loan, and a very short, to the point of insufficient a period of time and notice given to the farmer, therefore they can't get arrange other finance, and the problems that's caused. But we've also seen overextension or taking on too much risk. So you will occasionally see farming businesses that try to take on other investment activities such as development of property for housing or land, or taking on other business opportunities, and the income from the farm just can't support that as well. So you see a range of those types of issues.
Mr Wheatcroft, can I ask you the same question? What do you observe about the most common causes for farmers being in financial distress?
Can I separate my answer out? I was born a fifth generation farmer, and back then I absolutely would have said it's the environment within which you work, because there are so many things when you're out there farming that just you cannot know what the result's going to be in terms of rainfall and disease, the whole range of it. 8 years on, 8 years of tertiary study on, my head sees things as they teach you to in terms of how you would manage those risks. It doesn't diminish the reality of the situation for the farmers going through it. The same decision made 4 years apart, in my experience, I have seen one business thrive and the other go broke. Because the impact of those following years, when you have to take the risk of expanding, and virtually any Australian agricultural enterprise has had to do that to still be farming today or in the last decade. There's a lot that isn't actually controlled by management. So yes, it is always management in one sense, because how you deal with it is how you're managing it. But there are things that happen that are good decisions that end up with bad results. The difficulty I see is not so much the seasonal stuff, but of relevance to this commission, is when there's been an inability of the bank to respond in a timely manner. And the offence that people feel, and the sense that it's not justified, what has happened to them is unjustified. If we look at Harvard's business planning framework, they say that your values are really important in terms of the business. And what's happening with agriculture, with people that struggle to accept what's going on, is something's happening that's offending their values, the core beliefs of why they farm and how they're there. And that affects their ability to adjust quickly. And there is a notion that farmers put their head in the sand, but I don't accept that. I think it is true that farmers often look to tough it out. They look to adopt what they have used previously that's been successful, and they apply it again. And the systems that work actually allow them to sit there almost for too long, and too much loss occurs. And once the money is lost, there is no way back. And so I think there are a lot of seasonal issues, and often they are the fundamental trigger that causes problems. Yes, it is about management, but it's also about the values that people have and the way that they can be, as people, we react to offence. And, you know, in an MBA, they spend a lot of time these days in teaching you how you respond, the things that are hidden to you, as well as the people you're dealing with. And I think much of what Royal Financial Counselling has to do is to actually facilitate the process of people coming to terms with what's going on. And sometimes it is the bank that's actually out of shape on it. But that whole process can be worked through, yes. I think I've said enough on that, Commissioner.
No, you haven't. Go on. You tell me that there's an offence to values. Can you blow that out a bit more and expand on that? You haven't said too much, you haven't said enough yet. Go on.
So, the perception when you're involved in agriculture, where I grew up, was that you're actually doing something good for the world, for the country, for your community. Most of those people are supporting their communities, they're supporting each other. So it's a very integrated group. Additionally, in WA, with reducing populations, often your friends aren't the people you might choose, right? So it's an interesting mix in country towns, isn't it? You know, in country communities, because you're working together, and in a sense, that battling, there are always ways in which things are diminishing for country people at this time. The communities are getting smaller, the shift in WA away from sheep somewhat removed people from the towns. So that's all happening, and they're focused on surviving. So if everything is fair and just, we make good decisions. And it takes energy to work really hard for low returns. In WA, you know, in the Northern Wheat Belt, there's 2 decent years, 2 very poor years, and 6 moderate. Break even. Sometimes there's 3 poor in a row. Those 2 good years you have to capture. You have to be able to respond when they come around. And to some degree it applies to the other areas. So the inability for those people sitting there, as their debt increases, so the banks are less likely to confirm whether or not they're going to give them money. So for their experience, they're just sitting there waiting for answers, battling for a response, ready to work, ready to go and do it, but every day goes by, they're deprived of the opportunity. And this goes on for a couple of years. Now, from the banking perspective, they have got loans out there. They know they're getting towards the risk. So in many ways, they want to actually restrict that. But if the way of restricting it is to limit the amount of money available, which is in some ways a sensible option, they can deprive the farmer of the opportunity for the additional fertiliser, or more likely the additional chemical when it's needed early on to put the crop in, to control the weeds. The longer that you can understand a bank waiting until it knows whether it's going to run, because as we said, yield profit actually predicts then what the possible yield is. So for the bank, it makes great sense to hold off on that decision. Goes up the ladder, no one makes it. So from a bank's perspective, in addition to the banking perspective, you've got the local branch manager is paid on his portfolio. He has a reputation, but he also makes money out of it. He expands it, he can double his income. So that's one driver for him. He doesn't want a defaulting loan. He doesn't want to talk to the farmer about dropping back because it's going to cost him real money. Above that, I'm uncertain in WA whether the branch performance, but I've heard in other places there are. So they're judged as a group, but certainly at the state manager level, they have to predict to the national level what their book's going to look like. The level of loan, the level of risk, likely the level of losses. And then they're held accountable to that. So in terms of how they manage it, if the season's looking to be difficult, they'll make, as I understand it, of course, it's only my understanding, but they'll make the projections and then they'll act to make them come true. So if they've said we're going to write 6 million off in bad debts this year, it likely will be 6 million. So some people might act earlier with some people than they will others, and for some they'll delay it. So for the farmer sitting there, all of this stuff feeds into the unfairness of it. They know someone else who actually has been funded. They know someone else who's got through a year before or 5 years before. And so that sense of injustice about what's happening it doesn't make them cry, it makes them want to tough it out. it makes them become more, in their minds, more resilient and more likely to try to battle the bank. And so, and that's the dynamic. And so on occasion, there is no doubt in my mind that real harm comes to some people from that process and businesses as an unintended consequence, actually.
Mr. McMahon, can I ask you, do you regard farmers as generally being proactive in managing their finances and dealing with the bank?
Yeah, very much so, yes. They are quite resilient, and they're quite aware of where they're at with the overdrafts and the like. With regard to people with their head in the sand, some of those people may have been through years and years of drought. Some of them have had to destroy all the livestock, may not have any income for the foreseeable future. That takes quite a number of years, and I've been to properties where there's 3 months' worth of mail sitting in the corner, and a person not able to open it, and the bank manager would be complaining that the person isn't responding to requests for information and the like, and those people aren't. They're sick. They're suffering from depression, and they need a lot of assistance. They need time to work through their problems. They don't really know who to go to discuss issues like this. Like I said, they're proud people. They've been trying hard, and we've found that by giving them, by discussing it with them, there are potential avenues available for them. Sometimes they may have no option but to exit, but if they are exiting, at least they'll try to do it on their own terms, or feel more comfortable going to the bank and discussing things. But they certainly, you just need to give, the banks need to give people time and understand, the people that are managing those files need to understand the trauma and distress these people are going through, and don't treat them with indifference.
Mr. Day, what do you see in your work in terms of mental health issues affecting farmers in situations of financial distress?
Picking up what Mr. McMahon said, I mean, often you'll see a number of years of transpired, where the farmer is doing everything they can to try and hang on, do what they need to do, and then it does build up, and so the depression and the pressure, if you like, of not performing becomes high. There's issues of, I mean, as a small business, these are very different because the family home and probably intergenerational home is on the property. They're a member of that local community. The fact that they're not doing well, maybe picking up something what Mr. Wheatcroft said, compared to others is putting pressure on them as well. So all of those impact. So often the people who come to us who are at the very end and have been through probably some form of mediation or been through FOS or some other mechanism, they've reached the end of their tether, and you can see quite often that depression is certainly present amongst other things, and that makes it then a very difficult circumstance for the farmer to deal with, and the bank, I think, picking up again what Mr. McMahon said, I mean, the banks need to appreciate that as well, and I think they are trying, but generally speaking, I don't think that they are equipped to deal with that. Similarly, they've got business decisions to make themselves, and so you've got this really difficult circumstance of personal issues, business decisions being made by the lender at that time, and it just becomes very difficult then for all involved.
And Mr. Wheatcroft, how do rural financial counsellors assist in those circumstances?
If we exclude the people the exceptional cases, because I think that's slightly different, in the general terms, by calming the situation, by mapping out against the Harvard's business planning framework, the way to look at a business, the opportunities and the risks, the values and how they look at a future forwards. People calm and they clarify what it is they're trying to achieve, and at that point they'll make good decisions. It's actually, I reject the notion that people are actually, they're the poor decision makers. It's not. Many of these people make very good decisions, but the effect of the stress over years has actually diminished their capacity to make good decisions, as it does all of us. We know that from psychology. There's also a large amount of antidepressants into the rural community, I know, by the pharmacy. So all of that builds into the problem of restricting that clear decision making.
And sorry, Ms. Orr, if I just add, I mean, in terms of the people who come to us, you know, they obviously want someone to help, and they, to a certain extent, you may say they want someone to protect them. And the problem, and I'm not seeking sympathy, but the problem for ASIC is there's very little, as I said before, that we can do. What we do want to do is refer them to those services that might help put frameworks around them to help them make decisions and engage with the issues at hand. And that will be rural financial counselling, that will be personal counselling as well, that will be to farm debt mediation and those services. Now, often people don't want us telling them that, they want to see something else out of what they see as the banking regulator. But the best thing for a lot of them that we can do is put them to those, you know, valuable support services so that they can actually get frameworks for making better decisions around them, because at that time they probably can't do that.
Mr. Wheatcroft.
May I flag at the moment of difficulty, those, it would be interesting to know how many of the cases had receiverships involved out of the ones that complained to you, because the act of putting in a receiver never benefits the client. I absolutely categorically say that. I actually think in most cases it doesn't benefit the bank. And I suspect something else occurs. The banking decision to put them in may be driven by something else. They may actually think it's the independent person that will do the right thing. I'm uncertain, but I wonder if the Commission couldn't look at why receivers are put in, as opposed to the receivers in practice, the practice of receivership. There is nowhere to go once a receiver's in, and in terms of values, farmers will see that hard-earned money farm asset disappear under a receiver like you've never seen. What they would perceive the money is absolutely wasted. And I would be hard with my background from either the farming or the business management to say that's not correct. There's a massive destruction of value. And that sits deeply with people, Commissioner.
We'll be better off, ladies and gentlemen, I think, without the commentary. Let's just get on. Yep, go on, Ms. Orr.
Can I turn now to some questions about specific aspects of banks' practices in relation to lending to farmers? Can I start, Mr. McMahon, by asking you, by the time you become involved in disputes between farmers and banks, do you often see default interest having been charged on the farmers' facilities?
Yes, Ms. Wood, it does depend on which bank is involved. Some banks tend to use interest as high interest charges as a tool in their weaponry, if we can term it like that. It's an encouragement for people to address issues. I often see it as a self-fulfilling prophecy. When someone is in difficulties, the last thing they need is high interest rates. And so it certainly does depend on the bank. Some banks charge higher interest rates on the whole facility if it's got out of order. Others will charge higher rates on the part of the facility that's out of order. So, for example, they might continue to make payments on a term loan and increase the overdraft facilities, which is out, and charge the higher rates on those. It really depends on the matter.
And what sorts of rates of default interest have you seen?
Well, I have seen rates of up to 16%, but you know, most banks will have a higher rate in any event for agriculture than what that would be for a normal loan. Small business loans attract a higher rate, and look, it does vary from not only from bank to bank, but also from client matter to client matter.
And do you see instances of banks using the amount of default interest that's been charged as part of the leverage to resolve a dispute with a farmer?
I certainly see it with mediations. They'll use it as a carrot and stick approach. If you achieve certain milestones, we'll rebate the default rates. So that's a type of approach that some of them do use. Others will say, look, we'll just rebate all the interest rates from now on, and we won't charge you from a certain time and then won't charge any default rates on the facility. Certainly, when they're in during a deed of forbearance, normally the facility generally should be regarded as being back within order. But you know, it really depends on the particular bank.
And Mr Wheatcroft, do you see banks charging default interest in clients who
Oh,
come to you?
absolutely. Because from banking mindset, the way they tell a customer that they're actually getting at risk is by increasing the interest rate. I actually think it's part of their language. So I don't think it's yes, absolutely they do. And it makes it difficult for farmers, of course, because if you're in difficulty, the one thing you're trying to do is reduce your expenses. So that would be correct, as Mr McMahon has mentioned.
And Mr Day, does ASIC have any views on whether or not it's appropriate for banks to charge default interest?
In terms of whether it's appropriate or not, I mean, that's down to the terms of the contract and the lending contract. But what we do see is that it's very difficult and the common complaint to us is that the borrower can't get a reconcilable statement about how the banks constructed those default and penalty rates in the first place. And I think then what becomes very frustrating for the borrower, certainly when they get to a mediation point or a negotiation point, is that seemingly then the default and penalty rates are changed and lowered. So there's a question about whether or not they were real in the first place anyway. And so that's that question of leverage. Is penalty and default rates being applied as some form of leverage point to get, if you like, the farmer or the borrower to behave in a way that the bank does want? And yet it's still surprising to us often when the things that are shown to us that a bank which is in the business of providing statements of account seems to have problems, creating a defendable, reconcilable statement about what actually is owed. But I pick up the points that Mr Wheatcroft and Mr McMahon said as well.
Could you speak of banks using default interest as leverage? Leverage to do what? It's hardly going to be, is it, to get the farmer to work harder? The farmer's working hard. So leverage to do what?
If it's in a process of being in a deed of forbearance to achieve reduction in debt or to sell a property.
It will almost always be realise assets, won't it?
Almost always, yes.
Because otherwise, how's the debt going to go down?
Well, just getting back on one of the past comments, I think it was Mr Wheatcroft was talking about when the property, with the timeliness of providing funding and the like, if we've seen circumstances where for one unknown reason a bank has left one customer who's in similar circumstances to another, hasn't taken action, and in that particular matter, the bank was saying to both of them, look, we've got concerns about your viability. And they'd actually offered both mediations, and one wasn't able to proceed due to illness, but there was bumper crops happened over the next 12, 18 months. The farmer that was forced into the mediation in that he's had no other option, he felt that it was very unfair, him going into mediation when he had a good crop. And the irony is that they'd been through years and years of poor crops, the good crop, and then for the next 2 years there was actually very good crops. And the farmer that was able to not go into mediation and manage his affairs and not have to be forced to sell, he ended up coming out the other side very well. He had a very, very good return for 2 or 3 years, sold one property, had the other property debt-free and had much money in the bank, whereas the other client has felt very much felt it was very unfair that he wasn't able to take opportunities when for years he'd suffered through the droughts, and then there was an opportunity to get through. And they all see one another. You could live 50 miles away from one another, and everyone knows everyone in the area, and they see how things are progressing. So it's.
Mr Wheatcroft, can I ask you some questions about property valuations?
Yes.
For what purposes do banks use property valuations?
To determine the level of borrowings for the amount that they will lend.
And
security.
who generally performs the valuations?
An independent valuer paid for by the bank, and the valuation paid for by the borrower, and the valuation goes to the bank.
And Mr McMahon, have you observed instances where property valuations have been prepared not by an external valuer, but by one of the bank managers.
Bank managers, yes.
And in your view, do valuations prepared by people internal to the bank who are managing the origination of the loan pose any risks?
I think the risk is that the valuation, in inverted commas, will be to assist the loan application as opposed to being what may be an accurate reflection of the value of the property. And there certainly is that risk because the manager is likely to be getting some incentive out of the loan.
Now, Mr. Wheatcroft, you said that the borrower pays for the valuation, that's right.
Yes.
In your experience, do banks typically share the results of the valuation report that the borrower has paid for with the borrower?
It would be untypical for them to share it. It does happen on occasion, but it's not normal. And the response normally is that it's just the bank's valuation.
And in your view, should the banks share the valuation with the customer?
I wouldn't use the word should, but I would say that it would be valuable to have at the point when negotiations are occurring at the end, almost before a receiver or when things are finishing, for the more understanding and clarity and transparency that is available at that point, the better in those negotiations. The more a farmer understands what the bank's thinking and how they're making their decisions, I think is beneficial.
So why not should? You said you stopped short of saying should.
Sounded
Why?
like I was telling someone what to do, that's all.
A lot of people doing that to me at the moment.
That's all, Commissioner. It would be very useful to have it.
But
Yes.
what's your view? Is it that the bank should do it? It'd be wise
So
for
I
the
have
bank
a
to do it,
slightly
it'd be
larger
better
bank.
for the bank to do it.
In the overall issue, I think there are times when banks carry people through. In West Australia, there's no doubt at the second year of a drought, with no sign in sight of it breaking, that you would not want new valuations done at that moment. Properties that are put up for sale at the moment won't sell. So the bank carries that. I'm unsure if they have to have valuations, but my observation is that banks maintain that land value so that they don't default their whole book. So I wouldn't want to interfere with those processes where I think banks act responsibly. I don't have the view actually that banks, don't work with farming largely. They do. The problem occurs when things go wrong, and as we've said, the timeliness. But overall, I think the issue of valuation should be generally, I think the bank is the one risking the money, so I'm okay. Basically, you know what your value is anyway as a farmer. So I'm not arguing strongly that it should be, because there may be an unintended consequence, Commissioner, of forcing it out into the open, in which case the bank would need to withdraw money. And I think that's a risk. Yeah, that's all.
Mr. McMahon, do you want to comment on that? Do you see banks maintaining the land value in those difficult times, or do you have a different experience?
In respect of maintaining land values, or
Yes, and refraining. I think what Mr. Wheatcroft is saying, that the bank is refraining from getting a valuation in those periods. Is that what I understood correctly, Mr. Wheatcroft?
I wouldn't want to be responsible for saying the bank should get new valuations at those moments.
I find one of the problems with with talking about valuations, and if the problem has arisen because of a collapse in commodity, properties are likely to come down in value because of the commodity collapse, and that's not going to be a long-term thing. It will turn around when the industry recovers, and that is, we've seen it in the sugar industry in Queensland, we've seen it in the beef industry. Now there's record prices for everything, and the interesting thing with the beef, when the beef industry picked up, the values across the board picked up, and if banks are tightening their lending, making it more difficult for people to sell in that because other people can't buy, that in turn devalues the area, and the whole property market becomes deflated. And there is no one wins in those circumstances, because if the farmer's being forced to sell, often they can't sell and they take years to sell, and if we've been through mediation, we've got to go back and get extensions on the deeds and that type of thing, because the people just cannot sell. And so the bank is partly responsible for that whole valuation decline because there's so many forced sales coming on at the same time. And relying upon valuations is, I think it should be more important as to the capacity of the business to manage the debt when values are low, rather than what the values are at that particular time.
Mr Day, does ASIC have a position on whether banks ought provide copies of property valuations paid for by the borrower to the borrower?
ASIC thinks they should. I mean, I think I note that the Code of Banking Practice now says the banks will do that, and I think they should do that. But my personal view is I really question the point of valuations, generally speaking, anyway. They're only a snapshot at point of time. As Mr McMahon says, they're impacted by so many different things. You really have to question the value of them. And that doesn't matter if it's in the hands of the borrower or the hands of the lender. A borrower will always have a very sunny side up view of what the property is worth and its prospects going forward. A lender will change its view depending on a whole range of other circumstances, depending on what it is. In fact, you know, the arguments that I've seen caused just by a disagreement about the valuation and the valuer's experience, knowledge of the market, all of those, it nearly creates a fight for no reason other than just there's a document. And I just really personally question the value of valuations in the first place.
When the beef industry was really in difficult circumstances, particularly in North Queensland, valuers were finding it very, very difficult to do a proper valuation in any event because of there was no historic sales around that would be relevant. And so at mediation, a lot of the times the banks would say, look, we don't really want to rely upon the valuations because they're a historical snapshot. What does agents say they could get for these properties? And quite often the agents would come back and say they're unsaleable in that current market. And that's where I'm talking about the patience is needed by everyone, I suppose, but certainly by the bank to see that forcing people out in those sorts of environments is just creating a disaster for everyone, including other bank customers, because they all will be falling into that same category if they're using LVR type loan structures.
So a decreased valuation can result in a breach of an LVR covenant on the loan. Are non-monetary defaults, whether caused by a valuation or caused by something else, a common issue in farming disputes in your experience?
They can be. I think the major one would be that the existing facilities are out of order, and the bank has decided that they would like it paid back, or they want more. A lot of the facilities give the banks the discretionary powers to ask for money back, and in circumstances where it's difficult, it's almost impossible. The adverse material change of use and that type of thing, it certainly was an issue with the dairying industry years ago. There's been farmers who haven't asked, their facilities are in order, but the bank is still proceeding with mediation and wanting them to exit, wanting to end the relationship. So it doesn't necessarily have to be even breach. They can just have the decision that we no longer will renew that facility. And because the overdrafts can be reviewed annually, that gives them the option to do so. We've often seen where the loan facilities might have a function in it where the bank has got a discretion to ask for a large capital payment back, and there's no possibility of that being able to be done without the sale of farm. We've even seen where farmers have gone and asked for loans to purchase a new property. The bank says yes, they will fund that. When the loan documents arrive, it says we'll fund you to purchase this property, but part of the condition is you've got to sell another property. And that hadn't been discussed with the farmer. Farmer had already committed themselves to the contract because they were basically told their finance would be approved. So there are all sorts of ways in which the facilities can be clawed back.
And Mr. Wheatcroft, in Western Australia, do you see instances of non-monetary defaults being relied on by the banks?
I initially thought the answer was no, and it's not a general practice, but the Landmark case is a case in point where Landmark valued they used to include machinery and livestock in their valuations. When it went to ANZ excluded them, and so almost certainly most of those loans were in default. They certainly weren't, they weren't done in a way that ANZ did them, which I think fed into the problem that ANZ had in dealing with them. And we saw people, you have to question people when they take out a loan 1 year and it's called in within 12 months. To me, that's a trigger that something's going wrong in that situation.
And Mr. Day, the complaints to ASIC, do they tend to involve non-monetary defaults?
Generally, that they involve a monetary default, but the clause or the term that might be relied on might be a non-monetary default. But in the matters we've seen, and again, it's a very small sample over a 10-year period, we've seen monetary default in the majority of those. We've also seen where the monetary default may have been caused by the borrower having to pay for an independent accountant's report or effectively then a valuation as well, and that's helped exacerbate the situation and get to that point. But the majority of, far and away the majority of them are monetary defaults.
Commissioner, I see the time. I have a couple of topics left to deal with the panel, but this might be an appropriate time for a
Yes,
break.
2 p.m.
Thank you, Commissioner.
We'll adjourn until 2 p.m.
Please be seated.
Yes, Ms. Orr.
I'd like to ask some questions now about farm debt mediation. Mr. McMahon, you participated in many farm debt mediations. Could you please comment on the process generally and whether you think it's useful?
Yes, I have participated in many farm debt mediations. The process, when it was under the Queensland Farm Finance Strategy, the philosophy behind the strategy was early intervention and to trying to negotiate with the bank and the farmer. And if they entered into an agreement, then if there was default under that agreement, then the farm debt mediation would be offered. That was the idea in principle. The mediation was to be offered before enforcement action was taken, which was either going to court, appointing receivers, taking possession of the properties. Prior to that, there was it was simply nothing that could prevent a bank after it issued its notice of demand from taking possession. So the mediation process has been very, very important. I suppose the difficulty is with it is that there is a significant power imbalance, and when you're going to mediation, the obtaining information from the bank is extremely difficult, particularly relevant information if you have concerns about the veracity of the loan, or that certain actions that the bank may have taken during that are concerning to you. Often that information just doesn't become available. Under the old strategy, there was no overarching body that you could go to and make a complaint, and or there was no way of even enforcing any bank to go to mediation. There was a bank that simply refused to mediate for a while there. So the process did have its flaws, but the early intervention part of the process was very good. With the introduction of the new Act in 2017, there has been a more strident approach to the mediation. It certainly is much more. There are steps that have got to be taken. There is provisions in the Act for the bank to provide certain documentation, probably not as much as we'd like to have. In fact, when the bank does provide all the information, and all of the information is there for the client to see, if it's not in favour of the client, at least the client can see that the bank hasn't been doing the terrible things that the farmer thought. However, on the occasions when there are concerns and the bank does provide that material, it enables all the parties to negotiate on far more equal footing, and so that power imbalance is reduced. With the new Act, there is QRIDA, Queensland Industry Rural Development Authority. It's the authority that looks after the administration of the Act. And the Act does provide that all mortgagees, so it just doesn't, Queensland Farm Finance Strategy was really only banks that decided to sign up to the strategy, whereas it's all mortgagees. It doesn't matter whether you're a credit union or a private lender or a major bank. You're all captured by it, and there are provisions if you don't mediate, then the Act does provide for penalties for that. So but the mediation, it also provides that parties must act in good faith, and the process, if it's operated correctly, it's a very good process, certainly much better than what was available before. I can say that some people feel that they are under duress to reach an agreement, and the reality is that if they don't reach an agreement, but that the bank has acted in good faith, then the bank can apply, the mediator signs off and says there was a satisfactory mediation, then that form goes to QRIDA, and QRIDA issues a show cause notice to the farmer and says, is there any reason why I shouldn't issue an enforcement notice so as the bank can take enforcement action? So clients feel that they must get an outcome. There's no obligation on them to reach an outcome, but the reality is they've got to take a commercial decision. If they don't get an outcome, their only other option would be to go to court, because they can't go to Financial Ombudsman Service. There's no other sort of services around. So and the fact of people going to court is just completely out of the question for the vast majority of people that would be under financial stress. I have actually tried to seek other organisations that might fund some of these actions for public interest. It's difficult to get lawyers that aren't conflicted out, that have got experience in the banking industry, that aren't conflicted out with acting for clients in these matters. So in the absence of that, and I've never had a client that's been able to gain any traction that way. The clients have to make the commercial decision: will I enter into an agreement, or the result is that if they don't enter into an agreement, they run the risk of the bank taking enforcement action.
Mr. Wheatcroft, Western Australia doesn't have compulsory farm debt mediation, but you participated in the voluntary scheme within Western Australia, is that right?
That's correct.
And what are your views about the effectiveness of that voluntary scheme?
The most effective aspect of it is that it's early. It doesn't wait for the letter of demand. Pardon me. So either party can bring it with agreement of the other party to debt mediation early on. It also enables the people who run a Small Business Development Corporation have previously run small business debt mediation, and they realise the importance of having someone assist the farmer going through their documentation and actually understanding their position, and they immediately involve us as the Royal Financial Counselling Service. And as I have noted, 90% of the cases are solved before it actually gets to formal mediation, because it engages people early and it starts the conversation and restarts the conversation.
In your view, why is it important to engage people early?
I think that notion we described earlier of people toughing it out, taking a position and trying to defend it, often leads to a lack of communication with the bank. And the bank, from the farmer's point of view, the bank sends a lot of letters of which none of them really seem to matter. That's incorrect, because the bank is following a legal process that has an end point. But I think very often the bank's views are somewhat dismissed by the farmers because it's not part of, behaviourally, they've had letters that don't matter, in a sense. So it restarts the conversation and lets them hear the bank's point of view.
Mr Day, does ASIC have any views on whether farm debt mediation is a process that should be applied in all farm finance disputes?
ASIC supports external dispute resolution at all times in these types of matters. We can see from farm debt mediation it has a number of strengths. It seems to be a more personal, face-to-face process, and that obviously is beneficial. Obviously, the farmers want to be listened to and be dealing with people who understand farming issues, so that seems to be a big benefit. Also, as Mr Wheatcroft said, that this ability to call that type of mediation, or if you like, the precursor to the mediation on earlier, is obviously advantageous. So rather than it being a dire circumstance and at the end of the process, having it earlier is obviously a good thing. What we have seen though is that the interrelationship or the interaction between farm debt mediation and FOS, the Financial Ombudsman Scheme, which the big banks all are a member of, there is a problem sometimes between the interaction of those two. So if the certificate for denoting the end or signalling the end of and completion of the mediation, farm debt mediation, has been issued, we have seen cases where FOS will not look at the matter at all. We think that's a shame because farm debt mediation is just that, it is just mediation. There is no arbitration that follows as part of that process, as part of that scheme. Whereas obviously FOS has a mediation component, albeit its mediation component by and large is on the telephone, which we think for farming circumstances is probably less than advantageous in that, and farm debt mediation, as I said before, has advantages in that respect. But if in circumstances where the mediation is not successful and the parties can't come to an agreement, the matter can move then to arbitration in the hands of FOS as the Ombudsman Scheme, and that has real benefit. And we have seen instances where farmers, and again, this may be the only time, and hopefully the only time in their life they are involved in these types of issues, and they don't understand that and don't understand how those two things don't interrelate properly. And again, one is either a voluntary scheme or a state prescribed scheme. FOS is obviously in relation to licences at a federal level, and they don't actually refer to each other or interrelate in a way that's advantageous to the borrower.
One more point. One of the reasons it works is because it brings the level of person into the room that can make decisions. So the banks almost, I think they have the person handling it plus someone to review what they're doing, and that level allows a greater decision-making capability.
The advantage of mediation is also that the farmer has some control over what's happening and is able to negotiate in that outcome, where they both will have some compromises to reach an agreement, and it's far better for the farmer to be participating in the process than sitting on the sidelines, and they can be determining what the future is going to be it's in their hands as well.
You've annexed to your statement, Mr McMahon, a table showing the number of farm debt mediations that your unit has participated in over the last 10 years. That's at RCD 002400190021. That will be on the screen.
Oh, sorry,
now.
yes, yeah.
Can you explain this table? Does this relate to formal farm debt mediations or to instances where the farm debt mediation scheme is invoked that might resolve prior to a formal mediation?
These would be the farm debt mediations that have actually taken place. That doesn't include the numbers of mediated agreements. Oh, sorry, of agreements outside of mediation.
Yes, I see.
Yeah.
So we see there that from 2008 through to 2018, your organisation has been involved in 224 farm debt mediations, and the entity that you've dealt with most in farm debt mediations is ANZ, 60 of the 224.
That's correct.
Followed by NAB at 53 of the 224.
Mm-hmm.
And the largest numbers of farm debt mediations appear to have been in 2014, when your organisation was involved in 63 farm debt mediations. Are you able to offer any explanation for that spike in farm debt mediations in that year?
when clients are offered mediation, often the events have happened several years before,
Yes.
and it takes a number of years for them to filter through the system before they're coming into farm debt mediation procedures. And if you look back, 2010 is when there was the millennium drought was broken, there was the floods. 2011 we had the live export ban, and then I'm sure 2013 we had the significant floods again. There was, and funnily enough, the flooding events were so much more catastrophic to a lot of businesses than the drought. The drought sort of lingered on, and whereas the flooding events or cyclones and whatever really just came in and smashed crops and livelihoods. So I think that the spike would have been as a result of after the rain, after all those years of drought, properties were a lot of times were unsaleable. After the rain, when they'd be able to grass up and whatever, I think banks took the opportunity to say, well, these properties were marketable again. And unfortunately, during some of these periods, clients found it almost impossible to sell some of the properties. Yeah.
And what, if anything, should we make of the representation of the ANZ figures here? So I mentioned already that they had the highest number of participation in the farm debt mediations. That applies in that year, 2014, as well, with 23 of the 63 farm debt mediations in 2014.
Yes, well, some of those ones that are under the banner of ANZ would have been ones that would have been previously a landmark file that had been transitioned over to ANZ.
Yes.
And others would have been just the ANZ customers, but I haven't done a analysis of that. It would take some time to go through that.
Yes. And farm debt mediations can result in a deed of forbearance being entered into between the farmer and the bank.
Yes, generally speaking, they do, yes.
And can you explain what that is, what a deed of forbearance is?
Well, it's an agreement between the parties that during whatever the negotiated period is, the bank will forbear from taking any enforcement action, and the parties will agree to whether it's sell, refinance, sell part of the property and refinance, or sell everything. There's generally given timeframes to fulfil these particular functions, and at the end of the day, if they haven't fulfilled them by the expiry date, then it's up to the parties to whether they can extend it. The banks, it's really up to the bank whether they're prepared to agree to extend the facility, or the bank will take possession.
And in your experience, to what extent do farmers have a say in the terms of the deed of forbearance?
The farmers aren't told they must sign. It ultimately is their decision as to whether to sign or not. But the time frames, generally speaking, the farmers are wanting more time frames than the bank's prepared to give, and there's a lot of argy-bargy negotiating in relation to those things. If you have a look at valuations, the valuations will often say what the estimated normal marketing period for type of property, and for example, the further west you go, the longer the marketing period will be, because by the very nature there'll be fewer and fewer buyers the further west, for both having the financial backing to be able to purchase them and also the capacity to run properties out there. So each area has a different marketing period, and often the banks aren't prepared to consider that length of time for the forbearance period. And it's an extremely stressful period for the farmer, because they're under a stress to sell something which isn't the normal marketing period for the property, and they often have to take a reduced sale price in order to sell if they can. But But the tragedy of it all was when there were significant mediations and properties in forced sale environment, very few of them were selling. And there was a lot of extensions had to happen. And this has, as property prices have improved, it's enabled most of them to have sold. One of the things that we did mention about in the submissions was that the difficulty in people getting refinance in the circumstances if they're under either a deed of forbearance, asset management, if any of their facilities are out of order. Most banks, well, in fact, what we've been told by finance brokers and the like is banks don't want to look at another bank's problem. So unless the bank and the farmer can negotiate to get the facilities back in order by renewing or restructuring the facilities even during the forbearance period so as the facility is trading within their limits, if there is that option available, there is a possibility of a refinance, or if part of the property is sold, then refinance the balance debt. So there is that particular problem that you have to consider when you're looking at negotiating outcomes. The other thing is if a bank is prepared to do a debt write-down, the other banks won't look at them. There may be one or two of not the big banks, the others that may look at a refinance in those sorts of circumstances. This is all information coming to me by finance brokers and clients and accountants and Royal Financial Counsellors. And if a bank says, look, we're prepared to take a hit to get out, then trying to refinance that debt to another institution is very difficult, even if there's full capacity of the business to manage that written down debt. So there is a place in the finance world that's really needs to be looked at. If banks are prepared to give debt write-downs, then someone needs to take them on. Whereas before the GFC, that was quite a common occurrence that when we were negotiating, and frankly before 2008, we did very few mediations. Most outcomes were negotiated, and there was a lot of debt write-down. Other banks would go and take them on. That wasn't an issue. But since GFC, it's been a major problem. Is that answering?
Yes, thank you. Mr. Wheatcroft, can I ask you if you could comment on the question I asked and any other part of Mr. McMahon's answer then, the question being the extent to which farmers have a say in the terms of a deed of forbearance?
So not suggesting anything that said wasn't correct, but in addition to that, anecdotally, when you're offered a deed of forbearance, the bank is saying, we could take your property, but we're going to put on hold that if you do a certain number of things. So farmers really need to sign it if they want to continue farming. It's a very simple decision for them. I have seen it where they've taken the deed of forbearances off to a lawyer and paid $10,000 to get back a complicated set of explanations that of course doesn't simplify it for a farmer because it's in legal terms anyway. And deeds of forbearance actually just reinstate the bank has the right to do everything that it is already enabled to do under the loan agreement. So in one sense, they're good for the farmer because they allow the debt to be put on hold, well, not the debt on hold, actually. They simply allow the bank is prepared to finance them for a period of time while that sits, and they're holding forbearance their action. In WA, it almost always is part of an inevitable path to people leaving, but it can be, and we have seen the bank write off money and other banks take them on in WA. I think it relates back to what I said about the structure of banks and who's trying to build their book at any time and who's trying to reduce it. But as such, deeds of forbearance for farmers, really, they give them, they're just the offer. Do you want to continue or not? That's how they see them.
And
I was going to say that one of the other issues that needs to be considered is that deeds of forbearance shouldn't be used for the bank to improve its position. It's already got significant, now all of the information that's in the contract itself. So when they're improving their position by insisting upon additional material being put in there, I think is grossly unfair. But the often it's not even a deed of forbearance in that it could be just a very, very short agreement. But
Mr. Wheatcroft, Mr. Day before referred to the interaction between farm debt mediation and FOS. In your view, is FOS an effective body for the determination of disputes between farmers and banks?
Largely where it fits, it is. But FOS has limited scope and limited penalty or ability to reimburse for the farmer to receive compensation. But it is, we like it because it enables people with no resources, no money, to actually have, in a sense, someone look at their situation. So we strongly support it.
And Mr. McMahon, what do you have to say about the effectiveness of FOS?
our service doesn't directly become involved with hasn't to this date been directly involved with FOS for very reasons that if the clients have been to mediation, they won't look at it. And the jurisdiction is quite limited. Most farmers just wouldn't qualify for it. The limited number of matters that where clients have gone through other services, they have commented that they would not sure whether the FOS understood the nuances of rural lending and rural businesses. It's totally different to selling a house in town. There's all sorts of different issues that need to be considered when you're marketing a rural property, timeframes, and also about the even if with cash flows, understanding that a cash flow may not necessarily reflect the business that they're lending into, and having that sort of information, that knowledge, would be important. But I think if clients aren't satisfied with the outcome at mediation, having them an option for them to go somewhere else, I think is absolutely necessary. It would give both parties an incentive to get a resolution.
Mr. Day, in your role and in the review that your team's done of the complaints that have come in from farmers, have you discerned any change in the way banks deal with farmers in default in recent years?
You can see certainly the number of matters that are coming to us are smaller in recent years, and that reflected in the type of material in Mr. McMahon's exhibit that you displayed before. In terms of change of approach, change of behaviour, there does seem to be a slight increased tendency to want to negotiate and work that through. But have I seen that as a change in stance in terms of the haste at which receivers are appointed, or other options are considered by the banks? I think the answer to that would be no.
Mr. Wheatcroft, have you observed a change in recent years?
Oh, absolutely. Regarding a couple of the landmark case, ANZ have actually resolved virtually all of the continuing difficulties with farmers that are still operating. The ones that have already exited the industries, that I presume they're not resolved properly. But yes, certainly they changed. In fact, I'd say the notion that there might have been going to be a Royal Commission has actually influenced the banks to think that they might sort this, to pay some more attention to it from a higher level. Yes.
And Mr. McMahon?
Yeah, look, there's been certainly a great change, and Mr. Wheatcroft mentioned ANZ. ANZ implemented a moratorium, I think it was 2015. Any property that was in a drought declared area, they didn't take any enforcement action. They extended that for 12 months, and also they have supported customers, whereas in the past they may not have done so. They've certainly been far more cooperative and conciliatory with customers in negotiating outcomes than what had been the case before.
Can I finish by asking one question that I'd like each of you to address, perhaps starting with you, Mr. Day? if you could fix one thing in relation to agricultural finance and the problems that we've been discussing, what would it be?
I think it's the matter I raised before. I think the position of farm debt mediation is great, you know, compared to the approach FOS has taken to mediation in terms of it is face-to-face, it does involve people who understand farming, and I think that's been good. I think the movement from FOS to AFCA is welcome in terms of the increased jurisdiction and a defined set of terms around lenders to primary producers. But I would like to think that interaction and interrelationship between farm debt mediation and the ability to access arbitration through AFCA could be, you know, sorted out, but to a point that it gives, if you like, a best of breed response. I wouldn't like to see you have a national scheme that, if you like, might be administered in the same way FOS has done mediation to date. I think taking the benefits of the state systems that exist, whether they be voluntary or compulsory, so that there is face-to-face mediations involving farmers and people with experience involved as those mediators, I think would be a welcome change. So I think the interaction between the two systems, if you like, or schemes, I think there should be some work done to improve the circumstance, because both of them will have benefits, but I think if they're working well together, then it could be an increased set of benefits.
Mr. Wheatcroft?
I would say that in WA, most businesses are profitable. Overall, the Plan Fund Bank benchmarks that I've tended to show that. I calculated the amount of destroyed value in the clients we deal with over the period they have from when they're in difficulty to when they exit. And so over $1 billion of value gets destroyed during that period. And that's because there's something about the time it takes and the way it's done. I would like the Commission to examine whether or not the appointment of receivers achieves what the bank thinks it does. I suspect, actually, the banks haven't really looked at it, and it certainly doesn't support a client. I know of no case where it's worked. So if I could put up an issue, it would be about how receivers are used. If the Commission can't look at receivers themselves, that's fine, but let's look at how they're used and whether the banks actually intend them to do something that's fair. It was said earlier outside of this that those receivers work on behalf of the clients. And I had to admit that I had never come across that notion. It is outside my experience that is actually how they operate. So I suggest that perhaps there's a misconception. Well, I just put it up as an issue to be looked at.
Thank you. Mr. McMahon?
I keep on going back to what clients keep on telling me about the unfairness of facilities being able to be, at the bank's discretion, changed. And they have great difficulty well, everyone would have great difficulty if they're if they're the ones that are the subject of those changes, where one side can unilaterally change the conditions in the agreement. And if those facilities, if it's unfair as the public would see it, then it would be, if this was a special little thing to be able to have, and I don't know how we could ever arrive at this, but to have some ability for the fairness and the reasonableness of the actions to be considered. Legally, they can do under their documentation, under their loan contracts, but with the change, it'd have to be requiring a change of philosophy within the banks, but also probably law, that a fairness and a reasonableness be taken into account in relation to bank action. And I think clients would be far more comfortable with outcomes if they knew that it was fair.
Thank you very much. I have no further questions.
Any party having leave to appear, seek leave to ask questions of any of these gentlemen? Gentlemen, thank you very much for your attendance and for your evidence. It's very thought-provoking. And you may step down. You're excused.
Thank you.
The Commission give us a few minutes to arrange for the next witness.
If I come back, 20 to 3?
Thank you, Commissioner.
Yes.